Hey, welcome back to another trade recap. So this month I lost $900,000 in funding challenges, and unfortunately 700,000 of which were actually in phase 2. A 10% drawdown is within my expectancy, but I'd only actually experienced 7 losses this time. On my personal account, a 1% loss is normally a 1% loss, but on funding accounts where you're going through a trade copier, you've got poor pricing conditions and spreads, a 1% loss is actually closer to a 1.3% loss. Ultimately, this is my fault. I wasn't monitoring the accounts as closely as I could have been. Thankfully, I have the disposable income to continue purchasing challenges if I want to. My value as a trader comes from my yearly results. Hitting 10% drawdown is normal, and unlike most traders, I am happy to share with you when I do so. On January 18th, I started Zentum trading alongside Marco and Nico. We've quickly grown a strong community of traders, people that are new to trading, starting from scratch, and experienced traders that are looking to refine their strategy. I've been really enjoying discussing refinements and new entries with people, and honestly, it's exceeded my expectations. I didn't expect such a response. I've also implemented a few new entries. There's the internal reversal, which we teach in Zentum, and there's also a new range-bound entry, which I've been finalizing. So I'll be touching on a few of these trades in today's recap. This is an entry that I've used to trade just when I was running out of time on my challenges. So back when FTMO had a 60 and 30 day time limit, when I was reaching the end, I'd take these entries to try and pass the challenge. It's actually my friend Aaron that introduced me to this. And since then, I've been developing it with Marco, Nico, and Ruben. It comes by a lot of different names, but it's pretty general range-bound strategy. Some people know it as ICT's Turtle Soup. I've got a lot of ideas to improve this entry because at the moment it's very, very basic. So this month I took 7 trades, which generated a return of 0.93%. This is the first trade I took this month. It was a liquidity sweep entry on AU, and I gave this trade a 5 out of 10. It's not very good as my idea and understanding of the liquidity sweep has developed. So what I'm looking for is a shift in momentum. Any kind of momentum, just a push to the upside. Within here, people are buying. There's a lot of buying pressure, and they're placing their stops below the major low. So as price ranges around within the high and low, there's more buyers within this area, further strengthening this liquidity area. As we come down and approach this bottom, if we get another shift up, it further strengthens this liquidity area. Eventually, if we do pop in to this liquidity area, it's got a lot of names. You could call this a fake out, you could call this a double bottom, or even a triple bottom if you're considering this tap here. As soon as we get a reaction, I will look to go long, and I'm testing a lot of different stop losses and profit taking methods, but at the moment I'm just going with a 1 to 3. I will be targeting the highs though. So the reason this trade isn't that good is because, first of all, we're in a larger downtrend. We didn't really get a shift here, and we didn't really get a sideways range. I doubt the buyers here are putting their stop loss way down here. And the third, I'm not sure how many reasons I've given. Another reason this isn't so good is because the entry candle doesn't really show me a lot of conviction. After this entry candle, I would really just be expecting price to continue trending down or just to range. I'm not really expecting a reversal. So the next entry I took this month will be more familiar to you. This is just a classic continuation on EJ. We've got a larger descending channel. We had a really strong push up and a single candle pullback, a 2 candle pullback, sorry, and quite a small break. That's the only downside of this trade. I think I gave it an 8 or a 9 because the impulse was really strong. We're coming from high probability price action. It's just the break that's letting it down. But at this time, price is being quite volatile. If you look at my scales, 10 pips, this is a 10 pip stop loss right here. That is tiny. So it didn't really require much of a pullback. It did tap me in, but then it came back, unfortunately, for a 1% loss. So here's the next trade I took this month. This was an internal reversal, which is one of the entries we teach at Zentum. It's quite similar to the liquidity sweep in the sense that we're looking for a liquidity grab. But rather than looking for liquidity grabbed above and below a range, we're looking for liquidity grabbed above and below a trend line. So basically spotting a fake out. Unfortunately, this resulted in a 1% loss this time, but this was a really high probability setup. I won't go too much into the details, but in this case, I did get tagged out. Most of the time, it will tag you out on the next cat, it will tag you out quite soon after and then reverse. Most of the losses look like this, where it just tags you out and then it reverses. It doesn't often continue down from this kind of price action. But yeah, you can see we did continue back up from here. And that interestingly leads me into the next entry, which is another liquidity sweep around the same time. This is just a few days later on Thursday, January 18th. And the reason I like this one so much was because we're in a larger downtrend. Thinking of this like on the 4-hour time frame, this is essentially a larger scale flag while we're grabbing liquidity above this shift here. You can see that you're probably thinking why I didn't enter on these candles, and it's because at these points I didn't really feel like liquidity had been grabbed. I need quite a significant break above this high, and then I saw the shift in momentum here, immediately rejected, often happens with the liquidity sweep entry, and then came back and tagged me out for a 1% loss. So here's another trade on AU. I'm only trading the sweep entry on this pair at the moment. You can see we've got a larger liquidity area which had what I would call a multi-tap confluence. We've got this shift here, so we know there's buyers, and we've got this shift here, and we came down and kind of tapped this area. We didn't quite break into it, but we rejected from it again. This further strengthened the liquidity area. So price came in, we saw a slowdown, saw a soft shift in momentum, and I was happy to enter on this candle targeting a 1 to 3, but what I notice quite often is it actually does go to the next liquidity area, which in this case would be this candle right here above this shift down. So I may target those highs in future, but obviously this entry is still in development, and if you want to learn more about it, I'd recommend joining Zentum. So next liquidity sweep, just a little bit later, here was the previous one. Quite similar in the sense of we've got like this double tap, got shift down again, and we broke into this area, and this time we showed an immediate reaction. We didn't, this one, we had 2 candles and then a reaction, probably waiting for the right session, waiting for volume to come in. And in this case, we got an engulfing, not quite an engulfing. We got a strong shift in momentum, quite a strong reaction. So this trade just tapped me out and then continued down and would have hit the profit target if I was using an 11 pip stop loss instead of a 10 pip stop loss. And here's the final trade I took this month. This was another liquidity sweep. So this is focusing actually on the new high created by the previous liquidity sweep. And there's actually 2 liquidity areas here. There is this kind of major liquidity area, which I've drawn on, the outer liquidity area, and also a minor liquidity area. We've got these multi-taps here, we've got these shifts down, and although we grabbed this liquidity area, we saw no shift, which led me to believe that we're probably going to go up and grab the major liquidity area, which tends to be a lot more high probability. We moved away, didn't really get a reaction until London Open at 8 o'clock, and went and tapped the 3R, but it actually did continue all the way to the major low. So again, that's why it's something I may be researching. But yeah, there you go. Thank you so much for watching to the end of this video. If you want to learn to trade like me, I'll put a link to the free Zentum trading Discord in the comment section below. If you want to chat with me, I respond to every comment, and alternatively, I'm offering coaching calls if you want a one-on-one with me. I'll put all my links in the description. Thank you for watching. Remember to like and subscribe, and I'll see you in 2 weeks.